ಏನಮ್ಮ ಹುಡುಕಿಲ್ಲ ನೀವು ಹುಡುಗ ಕೂಡ
So, hello everyone, good evening to all. Just confirm me once in the chat box. My voice is audible. Okay, sir, thank you for your response in the chat box. And today we all are here for a very specific purpose, for a very specific reason. And we all are going to discuss something important related to this GSTR 9 and 9C. And as we all know, this webinar is specifically designed for the articles and for the office staff. Okay, not for the professional, because this is at a very discounted price. If we are going to share the details to professionals, then we'll charge something extra. Okay, just joke apart. But this session is specifically designed for the office staff and the articles, because the reason being, as we all know, that the data has been collected by our staff, the data has been prepared by our staff, the data has been finalized by our staff as well. We are just going to go through with the data and we are just going to file the return, or we are just going to provide the approval for filing the 9 and 9C. Okay, so the basic thing is that our staff should be completely trained to file this GSTR 9 and 9C. Okay. And as a chartered accountant, as a professional, if you have registered for this course, then we are providing the opportunity. You may share the recording to your staff freely. Okay. Just 99 rupees. And you can share the recordings to your staff, whatever number of your staff, 5, 7, 10. Okay. This is just a CSR activity from our side, you can say. So just try to share the recordings with your staff so that they can file the return in a very efficient way. And we all should try that our staff should be expert whatever the thing they are doing. Okay, so this is just an initiative. In very near future, we are coming with certain further webinars, certain other events for the office staff and articles for improvement and development of their knowledge. So this is just a part. So yes, before moving ahead, I just request everyone to keep one pen and paper with you, so that if you found any important point in the deliberation, you can make note of that. Okay. And yes, make this session as much as interactive. If you have any query, any question, any doubt, then you are free to raise the same in the chat box. Sachin is here to provide the reply to discuss certain things. Okay, although you have the WhatsApp number of our team, so further while handling the GSTR 9 and 9C, if you have any query or any question, you can connect with me. Okay, that is what is the facility which will be available. The mode of communication of this session will be Hindi and English both. We'll try to cover the maximum content in English language. There may be certain examples in Hindi, but definitely we'll cover in English or we'll convert in English for your comfort. So without wasting a single second, just I am going to share my presentation and we'll start our discussion. I hope the presentation is visible to everyone. Just confirm me once in the chat box. Okay, sir. Thank you, sir. Thank you. Thank you. Thank you. And also, I request, if possible, then try to change the Zoom name with your own name so that if any query, then I can interact with you with your name only. Okay. So we'll try to cover the content in next 1.5 hour. Okay. I am not going to take much more time because I know this is the evening time and to learn for 2 hours it's quite difficult. Okay, so we'll try to conclude the session in next 1 hour and 30 minutes. We'll try to cover each and everything related to this GSTR 9 and 9C, which will be helpful for the staff and articles. Okay, sir, the first thing what we are going to cover in this particular webinar, so we'll try to understand what do you mean by this GSTR 9, why there is requirement of GSTR 9, what are the documents which we should collect from our client for the effective filing of GSTR 9 and 9C, and how we are going to finalize the data for feeding the data in GSTR 9 and 9C, what are the relevant columns or what are the relevant fields which is there in GSTR 9 and 9C, and what the data we should feed in that GSTR 9 and 9C, and what the thing we need to keep in our mind while finalizing the GSTR 9 and 9C. Okay. So the purpose of fees 99 is GSTR 9 and 9C. So let's start our discussion on this specific session. Okay. So, sir, are you ready to learn GSTR 9 and 9C in completely practical way? Okay, sir. So in between the session, your chats in the chat box plays a very important role. My complete efficiency, my complete, you can say, motivation is completely based on your chats only. So, sir, why there is requirement to file this GSTR 9 return? As we all know that we are filing the GSTR 3B, GSTR 1 and CMP 08 and all other returns on monthly basis or quarterly basis, whatever will be the scheme which you have opted. See, there may be chances because I am also a human being. So there may be chances that I have feed certain data wrongly on the GSTR 3B, GSTR 1 in the GSTR 1 and 3B. Also, government wants a cross confirmation. Okay. Because government क्या सोचता है कि when we are going to externally confirm or cross confirm the things, then it will be a great approach for us. So from that perspective, government want a reconciliation that, sir, whatever will be the data which you have submitted with any other department, can you please cross verify with your GSTN records? That is what is called as your reconciliation with your books of accounts and everything. Also, at the end of the year, government wants that whatever will be the accounting you are going to maintaining in your books of accounts, the same should be reconciled with your GSTR 3B, GSTR 1. And sir, if there will be any difference, in that case, you have option, you can make it correct at the end of the year or while filing your annual returns. So we can say this is your annual closing from GST perspective. Because whatever data we are going to feed in this GSTR 9 and 9C will be final and will be very much relevant from the scrutiny, from the assessment, from the audit perspective. Your scrutiny will also be selected only on the basis of data which you are going to feed in GSTR 9 and 9C. Sir, as we are looking in our day-to-day daily basis, the GSTR 9 and 9C, so we can check, there will be no any specific thing in this GSTR 9 and 9C. Specific tables are there. We just need to feed the data. But the point is that where we need to feed the data in a correct way, that is what is the important thing. अगर कुछ भी feed करना हो, anyone can feed the data. But the point is that how we can feed the perfect data in perfect column, that is what is the important thing which we need to keep in our mind. Okay. and that is what is also a requirement of government. So this GSTR 9 and 9C is just here for the reconciliation from your books of accounts, and it is an external confirmation for the government that the data which you have submitted on any other portal, the same is reconciled with your GSTN common portal. Basically, we can say Income Tax Act. And also, this is quite difficult for the authority to check your monthly 3B, to check your monthly 1. So they require a consolidated data so that they can easily trace the same. And it is also an opportunity for us as a taxpayer, as a tax professional. अगर हमने कोई पाप किए हैं तो हम ईयर एंड में जाके उसको धो सकते हैं. दैट मींस इफ वी हैव मेड एनी मिस्टेक्स इन फाइलिंग द GSTR 3B, GSTR 1 return, we can rectify or we can correctly show it in our GSTR 9 and 9C return. So that is what is the basic reasoning of this 9 and 9C. Sir, एक क्वेश्चन आता है, if there is any tax which I had not made the payment of that particular tax during the financial year or within the timeline of section 16 subsection 4, that means there is a specific gradual system is there in GST. Suppose for financial year 2023-24, government says if there is any sales related to financial year 2023-24 and if you have reported the same in 2023-24, then it's completely okay. Then government has provided you an extended option that, sir, if you have reported or if you have forget to report it the same during the financial year, then we'll provide you extended timeline, that is 30th November of subsequent financial year or annual return filing date, whichever is earlier, you can make the necessary adjustment. Then after government is providing the another opportunity that, sir, if you have not reported the same within that extended timeline as well, then you can adjust the same in your GSTR 9 and 9C return. So total 3 levels are there. Now, in this GSTR 9 return, as a taxpayer, if I want to pay any extra tax which I had not paid during the financial year, I am eligible to do so. If I have claimed any excess input tax credit and if I want to reverse the same in my GSTR 9 return, I am eligible to do the same. But suppose if I have paid any excess tax to the government, now I want to recover or now I want to reclaim that amount from the government, then it is not possible in the GSTR 9 return. Or if you forgot to claim any input tax credit and you wish that I can claim this input tax credit in GSTR 9, then also this is completely impossible. That means this form number GSTR 9 is here to pay anything to the government. But if you are planning to take back anything from the government, not at all possible because the timeline has already provided. Okay. So recordings will be provided of this particular webinar because I know maximum number of participants are not joining in the live course due to the time constraint. So we'll provide you the recording for next 7 days. You can access the recording, you can check the recordings. Okay, for next 7 days recording will be available and it will be available by tomorrow morning. Okay, अभी हम लोग हमारे लाइव कोर्स पे और लाइव डिस्कशन पे ध्यान देते हैं. So this is the reasoning of GSTR 9, purpose of GSTR 9. Now, sir, for filing this GSTR 9 return, what is the requirement? Whether I need to mandatorily file this GSTR 9 return or there is any option is available. So government has given a turnover based limit. Okay. So this is the most important thing because, sir, as an article, as an office staff, whenever client is asking something from me, I need to give a direction to my, or I need to assign that work to my principal or to a senior associate. But the point is that we should also be capable that we are able to provide the response that when this 9 is available, what are the documents which is required, how we are going to feed the data. And for that purpose, this webinar is here for you. Okay. So this GSTR 9 and 9C, the limit is completely based on the turnover. If the turnover of a taxpayer to 2 crore rupees for the financial year 2023-24, then it is not mandatorily required to file the GSTR 9 return. Okay. Sir, as a chartered accountant, I suppose that in front of me all are the office staff and articles. Okay. So as a chartered accountant, the main profession of mine is to provide the consultancy to my client. Okay. This is not my job to file the returns or to prepare the returns. This is not my job. I am going to provide the consultancy to my client related to growth oriented, related to litigations, related to the compliances. Now, point is that as an article, as an office staff, or near future mein you will be a chartered accountant, or you are working in the field of this extremely great profession. So you should be capable that you should be in an advisory role, and for that purpose we should gain the knowledge in this particular field. Whatever work you are doing, you just need to gain the knowledge. So the limit is 2 crore rupees, and if the turnover is up to 2 crore, then no mandatorily required. Okay, but the point is that suppose there will be a specific situation, if there will be any reconciliations, okay, or if there will be any differences between output, input, GSTR 3B, GSTR 1, in that case this is advisable that whether the turnover is below 2 crore or more 2 crore, you should file the GSTR 9 return. That type of consultancy we need to provide to our client, and there is no requirement of approval of your principal of or of your any senior. Okay, sir, there is a difference between 3B and 1, there is a difference between books and 3B, so the turnover is below 2 crore, but we need to file, or we should file this return. Okay, now if everything is fine, then you can take the advantage of limit 2 crore. Now the question is that, sir, we need to decide the applicability of this GSTR 9 based on the turnover. Now the point is that, suppose I have 3 branches, one is at Rajasthan, Jodhpur, Rajasthan, another is at Maharashtra, third one is at Gujarat. Okay, my Rajasthan branch turnover is 1.8 CR for financial year 2023-24. For my Maharashtra branch turnover is 1.5 CR, and for my Gujarat branch turnover is 80 lakh rupees. That means the turnover of all the 3 branches are below 2 crore rupees. In that case, whether there is requirement to file the GSTR 9 return or not, just comment me in the chat box. Whether there is mandatorily required to file this GSTR 9 for financial year 2023-24. Rajasthan branch 1.8, Maharashtra 1.5, Gujarat 80 lakhs for financial year 2023-24. So today we have all the expert participants. Okay, so yes, definitely it is required to file the GSTR 9 return because the turnover limit is based on pen number, not on the basis of GSTN. Okay, so same pen, different GSTN, so you need to merge the turnover, and then after you need to decide the applicability of GSTR 9. So in such a situation, Jodhpur branch, Gujarat or Maharashtra, all the branches has to file the GSTR 9 return. The due date to file this return is 31st December 2024. Okay, if you are not going to file the return within the time, then late fees applicability is also there. Okay, now, sir, I am going to file the return, this GSTR 9 and 9C. But the point is that I have reported certain wrong figures, or I have not reported the perfect figure in the perfect column or perfect tab which is given by the government. In such a scenario, whenever there will be a departmental audit, the departmental authority may impose the journal penalty 25,000 rupees under each head of CGST and SGST. That is what is the implication of wrong reporting of data in this GSTR 9 and 9C. And as our staff and articles are going to feed the data, so we need to be very much excellent while feeding the data in the various tables. Okay, so I am also going to share with you the importance. Okay, this GSTR 9C is applicable if the turnover is above 5 crore, 5 crore or more. If the turnover is up to 5 crore, then there will be no any requirement of this GSTR 9C. Now, sir, what is the difference between GSTR 9 and GSTR 9C? GSTR 9 is the annual return. That means whatever data which you have fed in your monthly GSTR 3B, monthly GSTR 1, quarterly returns, you just need to provide the reconciliation of all that monthly or quarterly data, and you need to present the annual consolidated data which should be in line with your books of accounts. That is what is the thing which is there in this annual return GSTR 9. That means you need to report your outward supply, your input tax credit, and based on the adjustment of your outward supply and input tax credit, the tax payable. Okay, This GSTR 9C is basically a reconciliation. In this particular form or in this particular reconciliation statement, government is demanding the reconciliation of your turnover and reconciliation of your input tax credit with your books of accounts. Okay, so it will be a cross confirmation for the governmental authority. Turnover 5 crore or more, then this GSTR 9C will be applicable. With that GSTR 9C, we need to demand the complete audit report from the client so that the same should be submitted with the GSTR 9C, because in case of 9C, I need to attach the documents as well. With the GSTR 9, there is no requirement to attach anything. Okay. Now, what are the documents which is required to file this GSTR 9 return and 9C return? So, भी हम लोगों ने डिस्कस किया कि in this GSTR 9 return we are going to present the consolidated data of my monthly return, that is 3B1. Okay, so in that case I need to collect the consolidated data from my client, that is books of accounts, so that I can easily compare the same with the GST and common portal, that is feeded data, and I can come to a conclusion. So as we know that we need to provide the consolidated outward supply, the input tax credit. For that purpose, from my client's books of accounts, that is whatever will be the accounting software which is maintained by my client, and we know each and every accounting software is efficient to generate the GSTR 1 return, 3B return, 2B return. So do one thing, demand that GSTR 1 consolidated in Excel, demand that GSTR 3B consolidated Excel, demand the GSTR 2, that is the invoice wise entry of purchase for which the taxpayer has claimed the input tax credit, that means the system generated GSTR 2B. Okay, GSTR 1, GSTR 3B, GSTR 2B, system generated you need to take. Okay, whatever will be the taxation software which you are using in your day-to-day practice or in your daily routine, each and every our taxation software is efficient to reconcile the invoice wise sales and invoice wise purchase. Am I right? Okay, whether it is a Compute Office, whether it is a Genius or any other accounting software, because in different state different accounting software are followed. Okay, or in Excel you can also create the H lookups, V lookups and pivot table, and you can prepare the reconciliation. This is also possible. So the point is that you need to reconcile invoice wise sales through this GSTR 1 generated from the books of accounts with the GSTR 1 which you have submitted on the GST and common portal on monthly basis, so that you will found the invoice wise mismatch, that this invoice in your books of accounts value is 50,000, on GST and portal you have reported 45,000, and you have not corrected it till the timeline of section 16 subsection 4. So on that 5,000 rupees now we need to pay the taxes. So through this type of reconciliation, we will be on a conclusion with invoices, and it will be a great presentation. And every taxation software can easily prepare the report in 5 to 10 minutes. Okay, if you have 100 clients, then it will take around 1 to 2 days to prepare the consolidated data. You just need to feed, or you just need to put the Excel file of clients generated GSTR 1. You just need to get the GSTR 1 from the portal and reconcile it. The mismatch related invoices will be there. Okay, then the GSTR 2B which is generated from the accounting software and GSTR 2B which is available on common portal, reconcile it. There may be chances that certain invoices will be partially matched, certain invoices for which the taxpayer has booked the same in books of accounts but the same is not available in 2B, certain invoices which is available in 2B but the same has not been booked in the books of accounts. So we can easily get the reasons from our client, or in that Excel file we can put the reason that why this invoice is not available in 2B or why this invoice is not available in the books of accounts, so that we can easily calculate the eligible input tax credit. Am I right? Okay, we also need to demand the purchase wide item summary, and every accounting software is efficient to generate the same. Through that item wise purchase summary you can easily identify कि भैया क्लाइंट ने कोई इनएलिजिबल इनपुट टैक्स क्रेडिट तो नहीं ले रखी है. All the items which is mentioned in that item wise purchase summary, the input tax credit is eligible for the same, and the taxpayer is claimed eligible input tax credit only. Or whenever you will take that purchase summary, You just need to cross verify the data. This is also very much important. So the total of that purchase wise item summary, that total should be reconciled with the consolidated GSTR 3B. And if there will be any mismatch, then it is a indication that there is a chances that your GSTR 3B has been wrongly generated, or this purchase wise item summary has been wrongly generated. Then after, you need to check the reports very carefully. You need to take the audit report as well, so that you can reconcile the turnover, you can reconcile the input tax credit. If the GSTR 9C is not applicable, in that case also you need to take the audit report, because at least we need to reconcile the turnover, yeah. Okay. And we need to demand the all ledger. Through that all ledger, if you want to check any income ledger from the GST applicability perspective, any input ledger from RCM applicability perspective, or from input reversal perspective, you can easily do the same. Okay. So we can demand that all ledger as well. These are the basic documents which is required to file the GSTR 9 and 9C. So if any new client is coming to your office for filing the 9 and 9C return, you can provide this list. Arrange these documents with the GST and ID and password, so that we can prepare the basic data, and then after will come for the queries. Okay, query discussion. That is what is very important, exit meeting. Basic part of 9 and 9C and the documents required list is okay for everyone. Just confirm me once in the chat box. And whenever I am asking that this concept is okay for you in the chat box, then I require that everyone should provide the response in the chat box. Okay, so that it will be a confirmation that we are going in a good way. Now, next. Just wait for a single second. Okay. So now, as we have collected the data from our client, now the question is that whatever data we have collected, this data is correct. Because if we have collected the wrong data, that we are going to feed the wrong data in GSTR 9. So whatever will be the input, output will be accordingly. Okay. So we just need to verify the accuracy of the data which we have taken from the accounting software. For that purpose, cross verify the GSTR 1 with the sales register. Okay. So that whatever will be the sales B2B, B2CS export, the same will be there in your sales register and sales return register. Merge and check the total. Or you can assign this work to the accountant of your client. हम हर काम हम थोड़ी करेंगे. Just give this direction to your client. Okay, with this file, you just need to provide one Excel sheet for the reconciliation of your sales as per your GSTR1 with your sales register and sales return register. Okay. Then after, you just need to verify the GSTR2B which you have generated from the accounting software. And as we all know, we are also generating the consolidated GSTR 3B from the books of accounts. And in that 3B, we'll get the IGST, CGST, SGST consolidated. So compare the GSTR 3B input and the 2B input, which is also generated from books of accounts. So it will be a cross confirmation for us that both the reports are generated from the accounting software itself and both are showing the same figure. So it will be assurance for us. Okay. Then after, you just need to verify the GSTR2 books generated from the purchase register as well. So everything will be there. And whatever will be the purchase item wise summary you have generated, you just need to cross verify with the GSTR3B. Data collection and the data verification, both the things we have covered. Now, sir, now we have taken the data from our client. Now this is our responsibility to prepare the reconciliations. Okay. As we all know that in my GSTR 9 return, I need to present the outward and the input tax credit. Okay. So I need to prepare two types of reconciliation. One is based on output, another is based on input. Okay. And these type of reconciliations, I suppose or I suggest that we should prepare in Excel file so that we can provide that Excel to our principal or senior. If there will be any correction, they can easily make that correction. Or if certain seniors are also joining this session, then this is a luck for me. So they can also assign this work to their article and office staff. Now, GSTR1, GSTR3B and books. In my GSTR1, I am going to report my sales. In my GSTR3B, I am going to report my sales. In my books of accounts, obviously sales will be there. Okay. In GSTR1, I am going to report the invoice voice sales. In 3B, I am going to report the consolidated sales. And definitely in my books of accounts, sales will be there. Okay. Now, I am going to share with you certain scenarios. And if it is possible for you, then just write it down in your notebook. One ideal situation is that your GSTR1, your GSTR3B, and books of accounts, all the sales are reconciling. Taxable value, IGST, CGST, SGST, UTGST, everything is reconciling. It is ideal situation. There will be no any issue. And in your GSTR9, sir, certain data is auto-populated. Okay. In your GSTR9, the first part is related to your outward supply. Second part is related to your input tax credit. Okay. So outward supply related data will be auto-populated from your monthly or quarterly GSTR1. And input tax credit related data will be auto-populated from your monthly or quarterly GSTR3B. Okay. So now, as per our first situation, that is ideal situation, 3B, 1 and books, everything is reconciled. In that case, in our GSTR9, the outward related data will be auto-populated from GSTR1. And as we know that my GSTR1 is reconciling with the 3B and with the books of accounts. So keep the data as it is, which is auto-populated in your GSTR9. Second scenario, suppose your 3B is not reconciling with your books of accounts, your GSTR1 and books of accounts is reconciling. And there is difference between 3B and 1. But whatever will be your GSTR1, that is completely reconciling with your books of accounts. In such a scenario also, the data which is auto-populated in your GSTR9, which is from GSTR1, and your GSTR1 and books of accounts is completely reconciling. So keep that data as it is. Third situation, there is a difference between your 3B and 1. Your 3B is as per your books of accounts, but your 1 and books of accounts is not reconciling. In such a situation, sir, as we have taken the consolidated GSTR1 from our clients' books of accounts. So from that, prepare one summary. B2B sales, B2CS sales, CDNR, export related sales. Okay. So prepare that particular summary. And then after, prepare that particular summary. And then after, in your GSTR9, whatever will be the data auto-populated as per GSTR1, change it as per your books of accounts, because your books and 3B is reconciling, and in your GSTR9, you need to feed the data as per books of accounts. Okay. So whatever will be the data which is auto-populated in your GSTR9, change it and make it according to your books of accounts. Fourth situation, your 3B and 1 and books कोई भी नहीं मिल रहा है. There is a difference between 3B and 1. There is difference between 3B and books. There is difference between 1 and books. In such a situation, in your GSTR9, the data will be auto-populated from GSTR1. Change it and make it as per books of accounts. Okay. And how you are going to prepare B2B, B2CS, CDNR For that purpose, we'll try to share with you one format, or we'll share with you one format for that, okay, in Excel. Or we'll also share with you the technique how you can prepare that data from books of accounts, okay, in this session itself. We'll discuss the format as well on GSTR 9 and 9C. We are coming on that as well. So this is my first reconciliation from output perspective. Second reconciliation from my input perspective, and I need to reconcile the input tax credit which is reflected in GSTR 2B, which I have claimed in my 3B and as per my books of accounts. Okay. And as we all know, we are eligible to claim the input tax credit as per 2B only. So in such a situation, first you need to prepare the reconciliation between the books 2B and portal 2B. Okay. And for this purpose, we have already covered that we'll take the GSTR to be generated from books of accounts, take the GSTR to be generated from software, and prepare a reconciliation. And through that reconciliation, we'll identify the reason that why a particular invoice is available in 2B but not in our books of accounts, why a particular invoice is available in books but not in 2B, or certain partial mismatches. Accordingly, whatever will be our book sales, we are going to align this books input tax credit with my portal input tax credit. That means 2B. Okay. Now, my 2B and books input tax credit is reconciled. So now I am going to compare my books input tax credit with the 3B input tax credit. And if there will be any difference, I can reverse the same, because now there will be no any option for claim. Okay. So this is my input reconciliation, and this is the best way, because input के केस में हम लोग बहुत ज्यादा कंफ्यूज हो जाते हैं. For that purpose, just do one thing. First, reconcile your books ITC with the 2B ITC and make your books ITC as aligned with your 2B ITC. And then after, compare your books and 3B. It will be a very easy source for you. Okay. Then, as we all know that on certain type of purchases for expenditure and for goods, for services and for goods, as per section number 9 subsection 3, RCM will be applicable. So we just need to check that the RCM payable as per books of accounts. For that purpose, we have generated the consolidated 3B, and in that 3B the RCM figure will be there. We just need to cross verify that the RCM figure as per books of accounts is reconciling with the RCM figure which is shown in the 3B. Now, one point is that, sir, there may be chances that the client has made the accounting, and while making that accounting, that client has made certain errors, and due to that there is certain entry on which the RCM has to be paid, but the client has not paid. So for that purpose, you need to do the profit and loss account ka analysis, and for that purpose, just try to make note of this. You just need to read section number 9 subsection 3. In that particular section, they have provided the list of goods and list of services. Okay. Through that list of goods or services, when you will check the audited financial statement, अगर आपको पता है this is the goods and this is the services on which RCM should be paid. Okay. So when you will analyze the profit and loss account and trading account, you can easily identify, yeah, this entry is there, but client has not paid the RCM on that. You can make it in your working. Okay. And suggest the same to your principal or your senior that, sir, on this particular entry, the client has not paid the RCM and not made the correct entry in accounting as well. So I have identified something that is from the law background. I have not merely the feeded the data. So there is requirement of increment in my stipend. Okay. That is what is the thing we can do. Now, sir, the final reconciliation, which is, as we all know, in the balance sheet, there will be a closing balance of input tax credit. Okay. Current assets, duties, and taxes. And on our GST and common portal, also there will be availability of one credit ledger, electronic credit ledger, that is called as ECL. Okay. So in that ECL, you just need to take the balance of 31st March, reconcile it with your balance sheet closing balance. In 80 to 85%, the same will not be reconciled, because there may be chances that certain input tax credit which you have booked in your books of accounts but not claimed in 3B or after you have claimed. So demand the reason from your client, or you can prepare it in Excel. And then after, you just need to prepare one column for reason and share that sheet to your client that please feed the reasons. So this will be a reconciliation for you. And when you will get the reconciliation for input closing balance, then it will be a great assurance for you. Because अगर मेरा closing balance ही reconcile हो गया, that means my sales is okay, my purchase is okay, my RCM is okay. So that is what is my relevant reconciliations, output reconciliation, input reconciliation. From the discussion आपको ये idea लगा होगा, in this GSTR 9 nothing is there, just this is a reconciliation of input and output. If both the things are there, then your 9 and 9C will be done. I suppose through this particular session, through this particular webinar, you all will be in a situation to prepare the GSTR 9 and 9C in a different way, in a simplified way. Okay. Now, sir, let's start our discussion on the format of GSTR 9 and 9C. But before moving ahead, just confirm me once. Basic part, required reconciliations, required documents, and cross verification of data, because this is our base of 9 and 9C. अगर ये सारी चीजें परफेक्ट है, then you will be very efficient, very much efficient to feed the data in GSTR 9 and 9C very easily. Okay, because my data is correct, input is okay, then output will always be perfect. Okay, so confirm me once, sir, everything is fine for you. We have done the discussion of 45 minutes, and also ensure me once, sir, this session is not boring for you. Are you enjoying the session? Just give me a single second. I am sharing the PDF file. I suppose the PDF file is visible to all. Just confirm me once. Okay, sir. Thank you. So, first we'll discuss on this GSTR 9. Then we'll discuss it in 9C. Okay. Now I suppose everything is visible to you and the screen is also in a full screen mode, you can say. Now, we are going to divide this GSTR 9 also. Who I am to divide? Government has also divided this GSTR 9 into certain parts. Okay. Yes, sir. We are not going to discuss the basic details because it will be auto-populated. Okay. So the basic details, the first part is related to basic details, and this is the auto-populated data related to legal name, trade name, and the financial year and the GSTN that will be taken from the registration particulars. Okay, and this will be auto-populator. Whatever will be your client, if you are going to file the return for that client, then it will be auto-populated. Now, sir, in my GSTR 9 return, I just required your 100% attention on the screen for next 30 to 40 minutes. Okay. Is it possible? And don't take any burden on your mind or on your brain. Everything will be stored on your brain, in your brain automatically. Okay. Feel free, chill, relax. कोई बढ़िया सी मूवी देखने के लिए आए, वैसे है नहीं. चलो. Now, in the first part that is related to outward supply, in my GSTR 1 return, I am filing of 11th on the subsequent month or 13th of the subsequent quarter. In that particular return, I am going to show my sales. Okay. In my 3B, sir, I am going to share with you the logics as well, so that it will be in your brain. In your 3B, we are going to show the first the sales, then after input tax credit. Now, when I am making the sales, suppose I am a taxpayer, and when I am making the sales, there may be chances I am making the sales to registered person, or I am making the sales to unregistered person. Okay. There may be chances during that particular month I have made the sales to outside India. Okay, and I have received the amount in forex. So that will be called as my export without payment of tax or with payment of tax. There may be chances that during the month or during the financial year, I have made certain supply to special economic zone with payment of tax. There may be chances during that month I have made certain deemed export. Okay, as we all know, whenever I am going to sell anything under advance authorization, that will be called as my deemed export. EOU के अंदर अगर मैं कुछ export करता हूं, that will also be my deemed export. Okay, or if I am involved in the merchant exporter, then it will also be a deemed export. Okay, so now sir, हर एक टर्म को समझाना in this session it is quite difficult. When I am going to use the word merchant exporter, export oriented unit, advance authorization, if you have any doubt, you can do one thing, you can do Google, you will get the answer. But if you require the analytical view on that particular term, just do one thing, copy that term, provide it on WhatsApp, and write one line that please provide the relevant video on this particular word. My team will share with you and will definitely share with you the relevant, logical, reasonable definition of that word and the practical implication as well. Okay. So now, and this option is available for 31st December only. उसके बाद ना अभी आप खाली रिटर्न फाइल कर रहे हो तब तक I am available for you. Now, there may be chances that during the particular financial year, the taxpayer has made certain sales to registered person, unregistered person, to special economic zone, to export, and to deemed export. When the taxpayer has made the sales to the specific persons, then there may be chances certain return has been there. I have received certain goods back, or there may be chances I have given certain discount, and for that purpose I have issued the credit note. There may be chances due to price variation, due to the margin money, okay, due to the rate differences, there will be any requirement to issue any debit or credit note. So debit note and credit note will also be there. Now, sir, there may be chances when I have reported any sales in my GSTR1 return, suppose invoice number 52, taxable value 52,000 rupees. In subsequent month, I found that the invoice was not for 52,000, the invoice was for 50,000 only. So I can file the amendments as well in my GSTR1 return. I suppose you all have the idea that in the GSTR1 return, there will be one option related to amendments in B2B, B2CS. Okay. Now, when I am making the sales, there may be chances that I am going to make two types of sales. One is B2B, another is B2CS. Or इसके अगर मैं bifurcation करूं, if I am going to provide the bifurcation, just give me a single second. I am going to present one PDF file. Yes. Okay. So first we'll discuss the chart. Then after we'll discuss the particular table. Sales. Taxpayer will be eligible to make two types of sale. One will be taxable sales. Another will be not taxable sales. A specific sales on which GST will not be applicable, that will be qualified as not taxable sales, and a specific sales on which GST will be applicable, that will be qualified as a taxable sales. Okay. When I am using the word taxable sales, then there may be chances that will be to B2B, there may be B2CS, there may be zero rated supply, or you can say to special economic zone with payment of tax, to export with payment of tax, or deemed export. Okay. When I am going to report that particular sales, there may be chances of certain reduction. So credit and debit note. Or there may be chances that during the financial year, I have shown certain amendments. Okay. Now, not taxable means there may be chances during the financial year I have made certain sales which is exempted, which is zero rated. Zero rated means special economic zone without payment of tax. In taxable part, I have used the word with payment. In not taxable part, I am going to use the word without payment. And my sales to export without payment of tax, that means bond or LUT. We all know there will be a two types of exports. One is with payment, another is without payment. Or Sir, as per section number 9, subsection 3, they have given a list of goods and services on which RCM will be applicable. Or suppose if I am going to make the sales of that specific product or services which is mentioned in section number 9, subsection 3, then the recipient will be liable to make the payment of taxes. I am not going to pay the tax as a supplier. So that sale should be reported here. So when I am making that exempted sales, zero rated sales, or the special economic zone or the reverse charge mechanism, in that case, there may be chances related debit and credit note. Okay, because मैं जब taxable sales में कुछ reduction कर रहा हूं, then there may be chances I am going to reduce or enhance the not taxable sales. That is my debit and credit note related to not taxable sales. And there may be chances that during the financial year I have made certain amendments related to not taxable sales. This is the possibility of sales. And based on this possibility, government has designed your GSTR 9 return, that is annual return, and they have specified the fields in the GSTR 9 return. Now, let's go to the table. Now, B2B, whatever will be the sales which you have reported during the financial year in GSTR1 return, the same will be auto-populated here. Okay. And this is your unregistered sales which you have made during the financial year. And you are also going to generate the consolidated GSTR1 from the accounting software. And in that software, you will find specific B2CS. From that, you need to cross verify the figures, so that your sales which you are going to report in this GSTR1, the same will be with your books of accounts. This is your B2B, that means registered sales. During the financial year, if there will be any zero rated supply, that means the specific supply export with payment of tax. Because अगर वो without payment होगा, then I am going to show it in not taxable part. Supply to special economic zone with payment of tax. Deemed export, that means advance authorization export oriented units. Advances, sir, as we all know that GST will not be applicable in case of advances on account of goods. But if there will be any advances on account of services, then definitely GST will be applicable. Am I right? Okay. So, suppose on 31st March, I have received one advances on account of an event which will be happen in May month, 1 lakh rupees. So I need to pay GST at the rate of 18% when I will file the March month GSTR 3B return. So that should be reported here. Okay, advances on account of services for which invoice has not been prepared, but I have received that advances. So on account of receipt of advances for services, the same will be taxable and the same will be shown. Okay. Then related debit note, related credit note, and amendments that will be auto populated from your GSTR1, and you just need to cross verify the figures from the books of accounts, so that the total taxable value will be there. Total sales B2B, B2CS, zero rated, that means special economic zone with payment, export with payment, and the total will be there. And you just need to show accordingly the debit and credit note and the amendments. So your final taxable value will be there of your taxable sales. Okay. Now, as we all know, in case of inward supply liable to reverse charge mechanism, we are paying the taxes under self invoicing and we are claiming that input tax credit. So when we are paying the taxes on inward supply liable to reverse charge mechanism and we are claiming the input tax credit, in such a scenario, we need to show that RCM related liability here. That means outward supply liable to reverse charge mechanism, we need to show it here, and we will claim the same input tax credit in our input tax credit part, so that it will be a cross verification with the annual closing. Okay. So B2B, B2CS, zero rated special economic zone, deemed export, advances, and inward supply liable to reverse charge mechanism, debit credit note, and the amendments. So this is my taxable part. Now, sir, there may be chances of not taxable part. So how we are going to report the not taxable part in the GSTR 9 return. So here we need to report the export zero rated, the special economic zone without payment of tax, the inward supply on which recipient is going to make the payment of the taxes, the specific supply on which the e-commerce operator is going to pay the taxes, the exempted supply, the nil rated supply, the non-GST supply. And all these figure will be auto populated from your GSTR1, which you have filed on monthly or quarterly basis, but you need to make it as per your books of accounts. If your GSTR1 in books of accounts is reconciling, then there is no requirement to change any auto populated figure. Yes, you can do. Yes, you can do a specific thing. You can do a specific thing. You can do a specific thing. Here the data will not be rounding off. That means the data will be shown will be in points. Okay, so you can do the data in rounding off. That is what is the option which you have, and you can do this. Okay, now the credit and debit notes related to the nil rated non-GST supply, that is exempted supply, non-GST supply, and the related amendments will be there. So the total turnover, including your taxable and not taxable turnover, will be there as per your books of accounts. Okay, so just keep one thing in your mind for the smooth filing of GSTR 9 return, sir. I am going to cover less technical points in this particular webinar. Okay, so I am going to share with you a simplified explanation that how you can feed the data, how you can take the data, how you can report the data. So now, in this particular part one that is related to outward supply, you just need to keep one thing in your mind, that whatever data which is auto populated is same as per books of accounts. Keep it as it is. You can do rounding off. Okay. But if there will be any change, then make the data as per books of accounts. And for that purpose, we are going to generate the GSTR1 consolidated. And from that GSTR1, will prepare one summary B2B, B2CS, CDNR, export, and exempted supply, so that the complete detail will be there. Exempted supply, a particular supply which is notified as a exempted through the exemption notification under section number 11, the same will be my exempted supply. In case of nil rated, government has given a specific rate, prescribed a rate, that on this particular product a rate is nil, but exemption ke case mein this is through the exemption notification under section number 11. So in future, government may withdraw that exemption notification. Okay, and then after the section number 18 will come into picture. Now, first part related to output tax. Whatever part which will be optional will specifically share with you that this is an optional part. अभी तक हमने जो कुछ भी डिस्कस किया है, all the parts are mandatorily required. Whenever there will be any option or whenever there will be any part which is optional, we'll share with you. Okay, yes, this presentation will be shared with you, this PDF file and the presentation both will be shared with you. Okay, now the input tax credit. As we all know, when we are filing the GSTR 3B return, at that time, when we are filing the GSTR 3B return, at that time, we are showing the input tax credit. Okay, we are showing the input tax credit. So in 3B, we are showing the input tax credit. So government has provided one mechanism, or government wants certain bifurcation. For that purpose, government has done one work. Government is saying that the input tax credit which you have claimed in your GSTR 3B, we are going to auto-populate that input tax credit in your GSTR 9 return. Okay, that means in that GSTR 9 return, we are going to show the auto-populated GSTR input tax credit which you have claimed in your 3B. Okay, so government is going to show the consolidated figure IGST, CGST, SGST. Now government wants that, Mr. Sachin, what will be the amount of input tax credit which you have claimed under reverse charge mechanism, and what is the input tax credit which you have claimed under forward charge, provide the bifurcation. Okay, so in this GSTR 9 return, government ने बोला will provide you the total input tax credit. But the point is that you need to provide the bifurcation that this is my regular input tax credit and this is my input tax credit, which is RCM. That means in part one, outward supply, we have shown one specific thing, inward supply liable to reverse charge mechanism. And when I have paid the reverse charge mechanism, I will be eligible to claim the input tax credit. Now, government saying, Mr. Sachin, you are providing the bifurcation that this input tax credit is my as a regular input tax credit. Provide one bifurcation that this regular input tax credit is on account of input service or capital goods. Okay. Capital goods means during the financial year, suppose you have bought any fixed assets and on account of that fixed assets, plant and machinery, if you have claimed the input tax credit, we need the bifurcated figure for that. So they have provided three heads: input service or capital goods. Okay. Input service and capital goods. But they are saying that for financial year 2023-24, you may provide the consolidated figure for input and input service. This is optional for you. You can provide the bifurcated figure or you can provide the consolidated figure. So input and input service, you can provide the consolidated figure, but your capital goods, you need to provide the separate figure. And for that purpose, हमने अभी डिस्कस किया था डॉक्यूमेंट्स में कि we need to demand the fixed assets or we need to demand the audit report. When we'll demand the audit report, automatically the fixed chart will be there, fixed assets chart. In that fixed assets chart, we can check the addition, and through that addition we can easily found that this is the fixed assets bought by the client. We can easily identify the amount of input tax credit and show it here. Okay. Then reverse charge mechanism. Again, government is saying you need to provide two bifurcation from registered person from unregistered person. Okay. And you also need to provide the bifurcation that you have paid the taxes under reverse charge mechanism for input service, for capital goods. Again, government is saying for input and input service, you can show consolidated figure. But for capital goods, you need to show the bifurcated figure. Okay. So you can easily trace the figure of capital goods on account of reverse charge mechanism through the fixed assets chart. Okay. So input tax credit, total figure will be auto-populated from your 3B. Then you need to provide the bifurcation. This is my regular input tax credit. This is my input tax credit on reverse charge mechanism. Then you need to provide the bifurcation: input service, capital goods. Input service, consolidated figure can be shown. But for capital goods, you need to show the bifurcated figure taken from the fixed assets chart. You can easily get the figure of input tax credit. Now, government is saying that, Mr. Sachin, there may be chances during the financial year you have imported certain goods or services. Okay. So when you have imported certain goods or services, at that time also you have paid the taxes under reverse charge mechanism and you have claimed the input tax credit. So provide the bifurcation of that input tax credit as well. So next, government is demanding the bifurcation for import of goods or services. Okay. Under reverse charge mechanism. Also, government is saying, Mr. Sachin, as you know, the provision of second proviso, section number 16, subsection 2, and as per that proviso, the taxpayer needs to make the payment to the supplier within 180 days. And if the supplier is not going to make the payment within 180 days, then supplier has to reverse the input tax credit. Am I right? You have idea of this provision? Second proviso, section number 16, subsection 2. Within 180 days, the taxpayer has to make the payment. Or if the taxpayer is not going to make the payment, the taxpayer has to reverse the input tax credit on 181st day. Now, suppose during financial year 2022-23, you have bought certain goods from a particular supplier and you have not made the payment within that financial year. So you have already reversed the input tax credit during financial year 2022-23. Now in 2023-24, if you have made the payment to your supplier, so again you will be eligible to claim the input tax credit, and the same ITC you have claimed in your GSTR 3B. So provide the bifurcation as well. So ITC reclaimed, you need to show it. Okay. Then sir, As we all know, there are certain forms is available on GSTN common portal, ITC 01, ITC 02, ITC 03. Okay, suppose I am going to take the GST registration, okay, and I am going to apply for the GST registration within 30 days from the date of liability. In such a situation, whatever will be the input tax credit which is available as on the date of liability, I will be eligible to claim the same. But earlier I have not GSTN. So there will be no any auto-populated input tax credit on my portal. For that purpose, I need to file a form that is called as ITC 01. And during the financial year, if I have taken the registration, then there may be chances that I have claimed a certain input tax credit on account of that ITC 01. So the same is also included in the auto-populated figure. So you need to provide the reason or bifurcation. And for that purpose, government mentioned any other ITC which is not specified above. And that will be your ITC 01, 02, 03. Okay. 02 is related to your merger, amalgamation, demerger se related ITC. Now, sir, now we are in situation to check the form GSTR 9. All these fields will be there. Okay. Just check it down. This is your auto-populated figure of input tax credit from your GSTR 3B, and you need to provide the bifurcation. This is my regular input tax credit as input capital goods, input service. Input service is not mandatorily required. Then this is your inward supply liable to reverse charge mechanism from unregistered person. Bifurcation input capital goods input service from registered person input capital goods input service. You can easily trace the data from your consolidated GSTR 3B generated from the accounting software of the client. Okay. Now, import of goods. This will be the input tax credit, and when you are going to import the goods, there may be chances you are importing the capital goods, that is fixed assets, that you can easily identify through the fixed assets chart, and the normal input, and import of services. One important concept, that is section number 20, input service distributor. Okay, I suppose you all have idea about this input service distributor. I am just going to share with you one example for your clarification. If there is one head office is at Jodhpur, Rajasthan, and head office has multiple branches, Gujarat, Bengal, Nepal, oh sorry, Nepal nahi, Gujarat, Bengal, okay, and that Rajasthan head office is going to take certain consultancy for whole the unit. In such a situation, the consultancy provider is going to prepare the invoice with the name of Rajasthan head office only, but that service is utilized by all the branches. So that head office has to transfer the input tax credit or distribute the input tax credit. For such type of distribution, that head office has to take the registration as an input service distributor. And if as a branch I have claimed the input tax credit which has been distributed by the ISD, the same is to be separately shown. ITC reclaimed, that is 180 days wala principle. Tran 1, Tran 2 now not applicable because the time limit has already been over, so no requirement. Any other ITC which is not specified above, that is ITC 01, 02. So your total ITC which you have availed will be there, and you have provided the complete bifurcation. Now, government is saying only claim ही करोगे क्या, खाली claim ही करोगे क्या? Government is saying that there may be chances that you need to reverse the input tax credit. So for that purpose, government has identified certain reason for the reversal. Government is saying there may be chances, sir, you have not made the payment to the supplier within 180 days, so you need to reverse the input tax credit, and you have reversed the same in your GSTR 3B. So show that consolidated figure here. Okay. So reversal as per rule number 37. Rule number 37 will be applicable. Rule number 37 will be applicable in case of Rule number 37 will be applicable in case of non-payment to the supplier within 180 days and reversal accordingly. Rule number 39. that will be related to the input service distributor. Suppose the input service distributor has excess distributed the input tax credit. In such a scenario, the same should be required to be reported. Okay, section number 39, reversal. Now, sir, there may be chances that during the financial year I am using certain input tax credit, and that inward supply used for making the taxable as well as exempted supply. In such a situation, I have claimed the 100% input tax credit, then I need to go for the reversal. Okay, that means common input tax credit. In case I am dealing in taxable as well as exempted product, and I am going to use the same inward supply for taxable as well as exempted product, then I am eligible to claim the input tax credit for taxable outward supply only, not for the exempted outward supply. So for that purpose, I need to reverse the input tax credit. For input service, there will be a rule of 42, and for capital goods, there will be a rule of 43. So accordingly, we need to show that ITC of reversal, rule number 42, 43. This calculation you need to made on monthly basis. Also, you need to do on annual basis. And while filing the GSTR 9, you also need to prepare this particular reconciliation, that is reversal of input tax credit. ओके, हमको पता है गवर्नमेंट हैज इशूड वन स्पेसिफिक लिस्ट 17.5 ब्लॉक्ड क्रेडिट, motor vehicle related, food and beverages related, construction related. This ITC is not allowed it, so the same should be shown in this specific field. So this is my reversal related. In first part related to ITC, we have covered the claim related part, and the data will be auto populated from your GSTR 3B. You just need to provide the bifurcation. This is my regular, this is my RCM, this is my import, this is my reclaim of ITC non-payment within 180 days. Okay, this is my any other ITC, this is my input service distributor. Cross charge related ITC should be covered in the regular part itself. We should not show it in the input distributor related part. Okay, cross charge means the ITC transfer in case of distinct person. Okay, you can say this is just for an example. If you require the complete discussion on cross charge, WhatsApp will share one short video on cross charge as well. Now, so this is my claim wala part. Okay, and very simplified. This is very simplified, that the input will be auto populated in your 3B. You just need to provide the bifurcation. After preparation of the bifurcation, work on रिवर्सल, एंड फॉर दैट पर्पस यू जस्ट नीड टू चेक द नेचर ऑफ द इंडस्ट्री, दैट यहां पर कोई 180 डेज में पेमेंट नहीं हुआ है, देन वी नीड टू गो फॉर रिवर्सल. इनपुट सर्विस डिस्ट्रीब्यूटर का कॉन्सेप्ट है, देन वी नीड टू गो फॉर रिवर्सल. एग्जेम्प्टेड टैक्सेबल बोथ द प्रोडक्ट्स आर देयर, देन वी नीड टू गो फॉर रिवर्सल. दैट टाइप ऑफ थिंग वी नीड टू शो. Better to show it in your 42, rule number 42, because this is a reversal on account of the exempted goods. When the principal part is exempted, then the subordinate services will also be treated as exempted. Okay, so we need to do this. Now, the point is that the input tax credit reconciliation from GSTR 2B. Sir, for that purpose, we have generated the GSTR 2B from books of accounts, and we have a GSTR 2B on GSTN common portal, and we have already prepared the invoice wise reconciliation. Okay, and we all have the reasons that why there will be a difference between the 2B and the 2B which is available on GSTN common portal. Is that okay, Paresh ji? Now, government is also requiring the reconciliation between the 2B and 3B. Okay, now for this financial year there is certain issue with the reconciliation. Okay, because the point is that I am just going to share with you the crux in my GSTR 2B, because now government wants the reconciliation of 2B and the reconciliation of 3B in your books of accounts. Okay, now the point is that in this 2B which is auto populated in your GSTR 9 return, the input tax credit which has been shown in 2B during the financial year 2023-24, only that ITC is there in this 2B. Okay, the further ITC which you have shown in the subsequent month which is not there, or the certain data is wrongly prepared in this 2b, the data is not correctly auto populated in this 2b, there are certain issues. Okay, so for that purpose, as we have our invoice wise reconciliation, that is perfect. So we just need to keep our reconciliation ready for any future references. In this particular part, if there will be any negative figure come for this financial year, then keep it. Okay, if there will be any notice, we have our reconciliation that sir, your data which is presented in your 2b was not correct. Okay, and the correct data is here in our reconciliation, and government has also not issued any guide advisory on this specific issue. So this is advisable. Prepare one invoice wise reconciliation at your end, keep it ready. Okay, and show the figures accordingly. Now we need to prepare the reconciliation of GSTR 3b and 2b, and government has also identified certain reasons of the differences here. If suppose difference is there, then we just need to put the reason. The first reason, sir, there may be chances during the specific financial year, certain input tax credit which you have claimed during the financial year 2023-24, but the same was not available in 2b, and due to that you have reversed during the subsequent financial year within the timeline of section 16 subsection 4. This is the one reason, that there will be less ITC in your 2b and excess ITC in your 3b. So you need to show that we have reversed during the subsequent period. You need to show the figure in negative. Second, there may be chances certain input tax credit which is available in your 2b during the financial year, but in your 3b you have claimed in the subsequent financial year. So you need to show that figure in positive. This is also second reason. Third reason, there may be chances certain ITC which is available in 2b, but you have not claimed the same. That is ITC available but not availed. There may be chances certain ITC which is available in 2b, but the same is ineligible. That means I have not bought the goods from that person. In that case also, there may be chances of excess ITC in 2b, that will be ITC available but ineligible. Accordingly, we need to show the figures. ITC which I have adjusted during the subsequent financial year, ITC available but not availed, ITC available but ineligible. Okay, and as we know, this is the reconciliation of ITC with 2b and 3b, normal ITC done. Now, if there will be any import during the financial year, then government wants a reconciliation. What amount you have paid on account of your import, and what amount of ITC you have claimed. As we all know, under reverse charge mechanism, whatever amount of tax we are paying in cash will be eligible to claim the input tax credit. So government wants an assurance that the what amount of RCM you have paid on import and what amount of input tax credit you have claimed. And if there will be any differences, you need to show the reason. So this is my reconciliation of input tax credit 3b and 2b. Now, the fourth part, which is most important, and this table is also auto populated. Okay, this table is also auto populated. This field, all these fields are non-editable. These fields are non-editable. You are not able to change anything. These fields are editable. You can change it. Okay, so try to make this field as per your books of accounts. Now this field is coming from your GSTR 3b. Whatever will be the tax you have paid, tax liability you have created during the financial year, that will be there. Now there may be chances that, sir, as per your books of accounts, your liability under IGST head is 2 lakh rupees. But in your 3b, you have paid only 1,90,486. And you have not paid the same till the timeline of section 16 subsection 4. Then you just need to enhance that liability to 2 lakh. Okay, and whenever you will check the adjustment, that the adjustment will only for 1,90,000, then you need to pay the balance figure in DRC 03 in your GSTR 9. Multiple time many taxpayers are doing one wrong practice. They are not going to change the figures in this table. They are going to keep this figure as it is. No, we need to make this tax payable as per our books of accounts, and that should be as per our outward liability, which we have shown in our part 1, that is total taxable liability, IGST, CGST, SGST. The same figure should be here. And because in our first part we are going to show the figures of outward liability as per our books of accounts, So this will automatically be as per our books of accounts, and then we'll check that the perfect payment has been made or not. And if there will be any less payment has been adjusted, then we'll pay through DRC 03. And if there will be any excess payment has been adjusted, then you will not be eligible to claim anything from the government bank. That is what is the option. Now, in the beginning of the session, we have covered one specific point, that if there will be any input tax credit or output related adjustment related to financial year 2023-24, if you have not made the same in that financial year, but you have made the same during the subsequent financial year within the timeline of section 16 subsection 4, then you need to show it in your GSTR 9 return. Sir, there may be chances related to your outward supply. You may reduce your outward supply, you may enhance your outward supply. Related to input tax credit, there may be chances you have reversed the input tax credit, you have claimed the input tax credit within the timeline of section 16 subsection 4. So if there will be any supplies declared, that means addition, show the taxable value IGST, CGST, SGST here. If there will be any reduction, show here. If there will be any reversal of input tax credit, show here. If there will be any claim of input tax credit, show here within the timeline of section 16 subsection 4. No, Pankaj, there is no requirement to show that input tax credit in part 8C. That is, you have not claimed due to non-reflection in 2B. Okay, that input tax credit should be ignored. On this reconciliation, on my YouTube channel, there is one specific video is available for the complete reconciliation. Okay, you can watch that video. It will be very helpful for you. So the complete reasoning will be there. Is that okay, Pankaj? Now, the next part is related to my refund claimed and demand raised. This table is completely an optional table. If you want to feed, you can feed. If you don't want to feed, ignore it. Related to refund claim during the financial year, refund sanction, refund rejected, refund pending, demand raised, demand pending, demand paid. Okay. And this is according to your refund file and according to your demand. Okay. So this is not mandatorily required, so you can ignore this. Okay. Or you can skip this. Then next is my next table is also an optional table. Related to my supply received from composition dealer deemed supply under section 143, that is the goods sent to the job worker or the capital goods sent to the job worker or the goods sent on approval basis not written. This is also optional table. Then last, HSN code wise summary for outward and inward. So for outward supply, this is mandatorily required. For inward supply, this is optional. If your turnover is up to 5 crore, then 4-digit HSN code wise summary is sufficient. If your turnover is more than 5 crore, then 5 crore or more, then there will be a requirement of 6-digit HSN code wise summary. So till we have covered the basic concept of GSTR 9, the documents required for GSTR 9, how we are going to verify the GSTR 9, what type of reconciliation is required for perfect filing of GSTR 9, the basic details which we need to feed in GSTR 9, the outward supply, two types of outward supply, taxable, not taxable. Taxable में B2B, B2CS export with payment of tax, special economic zone with payment of tax, deemed export, and your advances. And inward supply liable to reverse charge mechanism, related debit and credit note related amendments. Under not taxable part, we have covered nil rated, non-GST exempted, the zero rated supply export without payment of tax, special economic zone without payment of tax, and RCM related debit and credit notes and related amendments. And we have covered the input tax credit. Second part will be related to input tax credit. The input tax credit will be auto populated. We need to provide the bifurcation as regular input tax credit, as RCM input tax credit. We need to provide the bifurcation input service, capital goods. Input and input service, we may show the consolidated figure, but for capital goods, we need to show the separate figures. Import, ITC on account of import of goods under reverse charge mechanism, import of services, ITC on account of input service distributor, ITC on account of reclaimed, and any other ITC which has not been specified above. Then after we have covered various reversals, rule 37, rule 39, rule number 42, 43, 17, 5k reversal, and any other reversal that is related to purchase return and all that. Then we'll cover the reconciliation of 2b and the 3b. For that purpose, the best way, prepare a separate reconciliation as per the perfect data generated from books and generated from 2b, because there is certain ambiguity in the data which is presented in the 2b of current year, and still there is no any advisory by the government. So there may be certain chances of the differences ITC available in 2B but not availed, ITC available but not eligible. Then we have covered the tax payable. That's the tax payable should be as per our outward supply and as per our books of accounts. This part is editable. We should make this part as our books of accounts. But the further adjustment which has been auto populated from 3B and which is not auto or not adjustable, not editable. Accordingly, if there will be any additional liability created, then we need to pay through DRC 03. If we have paid excess, then you will not be eligible to adjust the same. Then we have covered the adjustment related to the previous financial, that means current financial year 23-24 made during the subsequent financial year within the timeline of section 16 subsection 4. There may be enhancement, there may be reduction, there may be claim of input tax credit, there may be reversal of input tax credit. Then we have covered the optional part, refund claimed and demand raised, and the further optional part as per supply under 143 composition dealer से receive हुई है or the goods sent on approval basis. Then the last part, HSN code wise summary, outward, inward. Outward is mandatorily required, inward is optional. If your turnover is up to 5 crore, 4-digit HSN code, that should be reconciled with your books of accounts. If the data which is presented in your GSTR 9 auto populated from GSTR 1, if there will be any mismatch, then generate the HSN code wise summary from the accounting software and put it in the format. The same is importable. And then after, if your turnover is 5 crore or more, then 6-digit HSN code is required. Yes, sir. Basics of 9 and the detailed feeding of GSTR 9 is okay for everyone. Just confirm me once in the chat box. ITC taken up to 30th November, then we need to show it in 10, 11, 12, and 13. ITC related to previous financial year, and you are merely filing the GSTR 9 return. Okay, then we just need to do one thing. We just need to provide the input related information of the current year ITC. You just need to exclude the last year ITC, so the difference will be there, and this will be automatically indication that this ITC is related to your current financial year only. Okay, and if you are filing the 9C as well, then automatically there will be option that this is the input tax credit which is related to last year. You need to show it. Okay, I will discuss on that as well in next 10 to 15 to 20 minutes. Okay, that is what is the option we have. Yes, definitely will help you while filing the GSTR 9 and 9C return. If you have any practical query and you are an article assistant and office staff, just WhatsApp on that number, will definitely help you out. Okay, maybe in evening, maybe in early morning hours, we'll give you the time according to the slot, and we'll definitely connect with you, so you will get the help. There will be no any issue with that. And if you are a professional, then as a professional friend, definitely you can call me at any time on that WhatsApp number. You just need to message, we'll connect with you. No problem. Not till 31st December. If you have any query related to GST, you can connect with me. I'm always available. Okay, related to any professional help, I will be there. Now, if the turnover is 5 crore or more, then there will be a requirement to file the GSTR 9C, that is reconciliation statement, nothing more. Okay, so in this particular statement, we need to show the outward reconciliation and the input reconciliation. Okay, only two reconciliations are required. So for your outward reconciliation, just do one thing: turnover as per audit report. Now, turnover as per GSTR 9. Okay. Difference. Now, sir, as we have already finalized the GSTR 9 return as per our books of accounts. Okay. So now government is demanding that Mr. Sachin, when you have already finalized, so provide the reconciliation that this is the turnover as per books of accounts and this is the turnover as per GSTR 9. GSTR 9 will be auto populated. This is my suggestion to you. Before filing the GSTR 9, finalize the GSTR 9C as well. Then only file the GSTR 9, so that if there will be any error, we can easily rectify the same. एक बार फाइल होने के बाद there will be no any option for the revision. Now, suppose if I have three branches, one is at Jodhpur, Rajasthan, another is at Gujarat, third one is at Maharashtra, under same PAN number, then income tax audit will be one. Under GST, when I am going to report the turnover as per audit report, I just need to show the extracted turnover of the books of accounts or for that specific GSTN. Okay. So turnover will not be the complete turnover. Turnover will be the extracted turnover of that specific GSTN only. Then after the same will be comparable with the GSTR 9. Okay. Also, if some professional is watching this video or this webinar, then we have one 7-hour course for the professionals on this GSTR 9 and 9C. If anyone wants to join, then may ping on that number. Okay. Or they can connect for the course. Okay. That will be completely based on technical parameters. Now, government has also identified certain reason of the differences. So there may be chances certain item which is there in profit and loss account, but under GST you have paid the taxes. There may be chances of certain financial discount which is there in books of accounts but not there in GST records. There may be chances any advances on which you have paid the taxes under GST, but the revenue has not been booked in books of accounts. Okay, because the revenue will be booked when the invoice will be generated. So there will be a difference between the GSTR 9 and audit report. There may be chances of certain valuation related differences. Due to valuation, this is the value, but in income tax you have reported on actual transaction value. There may be certain differences on account of foreign exchange fluctuations. There may be chances of certain discount related issues. That discount is permissible in books of accounts but not permissible in GST due to the terms related to discount has been decided after supply. There may be certain unbilled revenue. What do you mean by this unbilled revenue? Sir, there may be chances there is a specific provision that the rent is to be accrued in the books of accounts on 31st March. But the tenant is going to pay the amount on 14th of April. That means 14th of subsequent month, and this is completely as per the agreement. In such a situation, that rent income is to be booked in the books of accounts on 31st March. But the same will be there on GST records on 14th April. That means when the taxpayer will file the April month return, then the same will be there. So in such a situation, there may be a difference of turnover in the audit report and the GST records. So this is also one significant reason. Government has also identified certain deemed supply as per schedule number 1. You can refer permanent transfer, disposal of business assets, principal and agent, distinct person, related party, import of services from associations. In that case, if these transactions are not for a consideration, then the same will not be booked in audit report, but the same is to be booked in the GST returns because the same is there in schedule number 1 deemed supply. And consideration should be decided as per rule number 27, 28, 29, 30, 31. So these are the probable reason of differences, and government has also provided the same. Government says that turnover as per your audited report, and there may be chances of difference on account of unbilled revenue, unadjusted advances, deemed supply, credit note, trade discount, composition dealer, okay, adjustment on account of supply to special economic zone, and the section 15, that is valuation, foreign exchange. There may be chances of differences on these accounts, and the last, due to any other reason not listed above, I suggest that this unreconciled turnover should be 0. So you can put the figure in this turnover differences not listed above and provide the explanation, just like in this particular field we have provided explanation regarding point number 50. So you also need to provide explanation regarding point number 50, whatever figure you are going to feed. Just for instance, there may be chances in your profit and loss account certain trade interest related income has been booked. Okay, but in your when you are going to feed the data or the turnover as per audit report, you are going to report the trading account turnover. So this will be a difference, because under GST you have paid the GST on that interest income, but the same is not there in your audit report. So you just need to put that figure here and you can provide the explanation so that your unreconciled difference should be zero. So there will be a very less chances of the scrutiny and assessment. So the first thing is turnover reconciliation. Second thing, government is saying you have provided the total turnover reconciliation. Can you please provide the taxable turnover only? So for that purpose, you just need to exclude your nil rated exempted non-GST supply from that taxable total turnover. So government has written the total turnover and they have providing the list that you just need to reduce the exempted nil rated non-GST supply. So your taxable turnover will be there. So it will be assurance for the government. So this is the first part related to the turnover reconciliation. Second part is related to the rate-wise tax liability reconciliation. Government is saying you have provided the turnover reconciliation, but the point is that, sir, we are the government and we are here for the revenue. So we just want that your revenue you have paid, that is perfect. So for that purpose, you just need to provide the rate-wise reconciliation. As in your tax payable under your GSTR 9 part number 4, you have reported this is my tax payable. Okay, that figure will be auto-populated here. That figure will be auto-populated here. And you just need to provide the rate-wise liability during the financial year. Suppose the taxpayer has made a sales of 5%, 12%, 18%, 28%, 3%, 0.10%. You just need to report the rate-wise liability under forward charge and under reverse charge. Okay. Now your point is that, sir, how we can get that data? So we are demanding the consolidated GSTR1 return from the client. From that GSTR1 return, you just need to put certain filters. First part in your B2B, put a filter on GSTN. Suppose the taxpayer is registered in Jodhpur, Rajasthan. So put a filter, begin with 08. And again put a filter on rate, 5%, 12%, 18%, 28%. So you will get the rate-wise summary, 5, 12, 18, 28. And as the taxpayer is registered in Rajasthan and you have selected for 08, so all intra-state supply will be there. Then just change the filter on GST and does not begin with 08. So all intra-state supply will be there. And then after calculate the rate wise, then check for B2CS, then do the same exercise for CDNR, debit note, export. So your complete rate-wise liability will be there. We'll share you the Excel format as well. Okay, so that it will be very easy for you. So you can easily prepare the rate-wise liability and you can feed the data here. So your reconciliation related to rate-wise liability will be ready. Okay, that is what is the way. Then turnover reconciliation, rate-wise turnover liability reconciliation done. Sir, your maximum efforts will be for your GSTR 9 only. Your 9C will be very easy because you have already reconciled all the things. You just need to present the things. Okay. Then you need to show the input tax credit as per your books of accounts. That is consolidated GSTR 3B generated from books of accounts and the ITC which you have claimed in your GSTR 9. That means which you have claimed in your GSTR 3B and the same you have reported in your GSTR 9. Now there may be chances of differences. The first reason, there may be chances related to last financial year you have claimed a certain input tax credit or reversed certain input tax credit. So show it here. Or there may be chances related to current financial year you have claimed a certain input tax credit in subsequent financial year or reversed certain input tax credit in subsequent financial year. Show it here. Last year related ITC when you are going to show here, then once confirm that figure from the last year GSTR 9, because in GSTR 9 you have shown that this input tax credit we are going to show or we are going to claim in subsequent financial year. So this will be a cross confirmation. And still if there will be any difference, then put a note. There may be chances certain input tax credit which you have not claimed, then you need to put the figure that related to financial year 2023-24 we have not claimed that input tax credit and we have not claimed this input tax credit within the timeline of section 16 subsection 4 as well, hence the same has been lapsed. So this is my input reconciliation. All these tables are mandatorily required. Now there is one optional table. This is my headwise ITC. In this particular table, you need to provide the headwise bifurcation. You need to provide the headwise bifurcation of input tax credit, which you have claimed in your GSTR 3B, which you have reported in your GSTR 9, and which is reconciled with your books of accounts. For that purpose, when we have covered our discussion on the documentation part, we have done our discussion that these are the documents which is required for the GSTR 9 filing. In that case, we have covered one specific document, item wise purchase summary. And through that item wise purchase summary, you can easily feed the data in all these fields. But before feeding the data, you just need to ensure that the total of ITC which is there in purchase register, the same is reconciling with the consolidated GSTR 3B ITC. So it will be a assurance for you. And then compare this headwise input tax credit with your GSTR 9 input tax credit. And if there will be any differences, then we need to provide the reason. But keep one thing in your mind, whatever amount of difference is here, the same should be reconciled with your this figure. Because the total is same. Here you are providing the consolidated reconciliation, and in the second part you are providing the headwise reconciliation. So both the differences should be same. There should not be any differences. Okay. Then in your GSTR 9C, if you want to show any additional liability that you have not shown in your financial year within the timeline of section 16 subsection 4 or in the GSTR 9 return, then you can show it here and you can make the payment through the DRC 03. For example, suppose certain trade interest is there and the taxpayer has not made the payment of taxes during the financial year section 16 subsection 4 timeline maybe, and you are going to report it here. Then suppose the rate of GST is applicable at the rate of 18%, show the value CGST, IGST, SGST and the interest as well, and pay the amount through DRC 03. So this specific part is related to your additional liability which you have not declared earlier. And at the end, with this particular form, you need to attach the audit report, that is trading P&L balance sheet and form number 3CD. So in this GSTR 9C, if your 9 is perfect, then no any extra efforts is required or no any hard efforts is required for filing the 9C. First reconciliation, turnover reconciliation with the audit report and the GSTR 9. Probable reason may be deemed supply unadjusted, unbilled revenue or discount or financial credit note or valuation related things. Then you need to provide the taxable turnover, and for that purpose you just need to reduce the non-GST nil rated exempted RCM related supply from the total turnover, so your taxable turnover will be there. Then you need to provide the rate wise liability reconciliation. You just need to download the consolidated GSTR1, and from that you just need to prepare the rate wise liability and put the figure here. Then we need to provide the input reconciliation ITC as per books of accounts, ITC as per GST records, and if there will be any differences, provide the reason related to last year or related to subsequent financial year. Okay. And then we need to provide the headwise input tax credit and the additional liability if any. So in this particular webinar, we have covered the basics of GSTR 9, why there is requirement of GSTR 9, the applicability of GSTR 9 and 9C, the limit of GSTR 9 and 9C, the documents which is required, the verification of documentation, the reconciliation which is required for filing GSTR 9 and 9C, the table wise discussion on GSTR 9 and GSTR 9C, and the attachments with the GSTR 9C. Also, this is my humble submission to you. Whenever you are filing the or preparing the data of GSTR 9 and 9C, schedule one exit meeting with your client. Ask there is any additional place of business, there is any change in the additional place of business, principal place of business. Check the HSN code which is mentioned on the GST and common portal. The same is in line with the business. That means the nature of industry. Check any additional notices is there related to scrutiny for which you have not submitted the response. Because this is not merely the consolidation or reconciliation of data, this is the annual closing. And yes, Dhavalji, we need to provide the complete audit report, the whole audit report. And with that, if possible, because we are going to do the consolidation in case of multiple companies. So consolidation related separate financial statements, that is standalone financial statement, also should be attached. Yes, sir. This is all about from my side. And if you have any query, you can connect over WhatsApp. That platform is also available for you. Okay, I will definitely provide you the response. And post this session, you will get one feedback link. And I request everyone to please provide the feedback of this particular course in this chat box as well, because your feedback plays a very important role for me. Okay, that will be award, that will be reward for me. So whatever will be your feedback, you may comment in the chat box. I am here to verification. This is the verification part. You just need to select through the DSC, through the EVC, and you just need to file it. Post the session, you will receive the feedback link. After filing that feedback, you will get a gift from our side as well. Okay, so you just need to share the screenshot of your feedback on the WhatsApp number, so that you will get a gift as well, digital gift. Related to financial year 2023-24, which you have reported in 24-25, you just need to show it in 10, 11, 12, and 13. 12 and 13 is related to input tax credit, 10 and 11 is related to outward supply. Interest received from bank, then you may show it in your exempted part of GSTR 9. Okay, you can show it in the exempted part of GSTR 9, but in 9C it will not be taxable, because interest received from bank is not taxable, so there will be no any requirement to show. Input access claimed in the financial year 2023-24 and you want to reverse, then show it in other reversal 7H and pay the amount through DRC 03. Verification of data methodology will definitely share with you that PDF PPT file, so you can check the same. Okay, there will be no any issue with that. You will definitely get the PPT. No, table number 12 and 13 is not optional. You need to feed the data, and this is beneficial for us. If we are not going to feed, then in future government is saying that you have not claimed the input tax rate related to last financial year. That means in this financial year 24-25, you have claimed certain excess input tax credit, and they will raise the demand. So accordingly, reporting is must. Yes, sir. I also required your valuable feedback in the chat box. And whenever you will provide the feedback on the link which you will receive on WhatsApp, try to provide the feedback in 2 to 3 lines. If you are going to introduce any sales which is not reported in your GSTR 3B, then or GSTR 1, then you will feed the data in your GSTR 9. Auto populated will be from GSTR 1. Change it as per your books of accounts. Then automatically your tax payable will be announced, which will not align with your tax paid figure in your 3B. So excess payment will automatically be there, and you need to pay it through the DRC 03. That is what is the option we have. Yes, Dhavalji, you can do it. You can reverse it in other reversal and you can pay the interest. Are you talking for this? table, Hemanji? This part is completely editable. You can change this part, you can make this as per books of accounts. You cannot edit this part. Okay, so whenever you are going to feed the data as per your books of accounts, there will be a difference will not be showing here, but whenever there will be any calculation, the difference will be there and you may pay the amount through DRC 03. That is what is the option to show any excess liability which has not been shown till the timeline of section 16 subsection 4. For ITC related to 2022-23, then I request, there is one video is available on the YouTube. We'll share with you the link as well. So go through with that video because it reconciliation will take around 45 to 50 minutes. Okay. So that will be the complete video on the reconciliation of input tax rate. And I suppose that will be very much helpful for you. Is that okay, Paresh Kumar ji? So you just need to refer that video. So your all doubts related to the input tax rate last year, current year, or subsequent financial year, that will be completely okay. Any other query? I suppose no queries there. And if anyone wants to submit the feedback, then I am here to listen or see your feedback in the chat box. Yes, definitely we'll share. We'll share. On your mail ID, you will receive the video. You will receive the content, the PDF file, and the PPT PowerPoint presentation as well. Okay. Everything you will receive on your mail ID by tomorrow. And also now you will receive one feedback link on your WhatsApp number. So try to provide the feedback in the link given below. Okay. You will receive the feedback link very soon. So thank you everyone for listening. Thank you everyone for joining. And this is a great pleasure to learn something with you and to discuss something with you. And on every Sunday morning, 7 to 7:30, we have one free webinar. Okay. So if anyone wants to join that group for the free webinar 7 to 7:30, then just text on this number. You will be added to that particular group. And every Sunday morning, 7 to 7:30, you will get the link to join that particular webinar. But Sunday go 7 to 7:30. Okay. Quite difficult. Yes. Lorry freight, no RCM. Local gadi bhada, no RCM will be applicable. In case of lorry freight, no RCM will be applicable. Krishna ji, refer section number 9, subsection 3. If you will check the specific term GTA, goods travel agent, and the lorry is not covered under the definition of GTA, hence RCM will not be applicable, and the same is not applicable in case of section number 16, subsection 4 from 13th October 2017. So the same will not be applicable. Related to 10, 11, 12, 13, which you have shown in the last year, and you want to show it adjustment, then you need to show the adjustment in your GSTR 9C. And if the GSTR 9C is not applicable, in such a scenario, when you are going to provide the bifurcation of input tax credit in GSTR 9, show the bifurcation for the current year related input tax credit only. So automatically there will be a difference. So that difference will represent that this ITC is related to your last financial year, previous financial year. That is what is the option. So there is no requirement to show it any specific figure. If the input is not available in TB and you have claimed the same, then automatically negative figure will be there. Automatically negative figure will be there. In this particular part, automatically negative figure will be there, and that will be indication that the taxpayer has claimed certain excess input tax credit which is not there in GSTR 2B. Yes, definitely. When you will go for the practical filing of 9 and 9C, and if you will face any issue, connect with me. We'll try to provide you the response in a timely manner. Okay. So thank you everyone for joining, for listening with us. I suppose no queries there, and for spending with time with us. So if anyone wants to join the free webinar 7 to 7:30 Sunday morning, then you may text on that particular number, and we'll meet in any other seminar, in any other seminar, in any other webinar, in any other physical event, virtual event. Thank you everyone. Bye bye.